value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Joseph.
My pleasure, Jim. Good to be with you.
Joseph, the EAA data on Wednesday, October 21st, showed commercial stocks falling by 1 million barrels versus an estimate of a decline of 1.3 million barrels. There would have been a large inventory build of over 6 million barrels if not for net imports falling by 1.0 million barrels per day. What does this mean? We've had a lot of hurricanes roll through the U.S. production area. It's between, I believe, Mobile, Alabama, and Houston, Texas. That area has been hit twice. Is that affecting gasoline inventories, and will it affect prices?
Well, it's affecting, U.S. Gulf Coast production. Like the U.S. Gulf Coast offshore produces 1.67 million barrels, or 90. That's the 92% of the Gulf Coast production was shut in, and also 62% of the offshore natural gas, 1.67 BCF a day, was shut in, and that in total is like 15% of U.S. crude production and 5% of U.S. natural gas production. So last week you had 600,000 barrels a day shut in because of the hurricane. So production went from 10.5 million barrels a day to 9.9. And that's down 2.7 million barrels from a year before. So that's a positive for oil prices. The negative for oil prices, and why we were trading around 41.5, and then we busted for a little while under 40, and we're about 40.20 today, is that net exports fell, or exports fell 900,000 barrels, and the reason is the buyers of like China and the others who are supposed to be buying U.S. crude are not. And in Europe, with all of the problems that are going on with COVID and rising COVID cases, more lockdowns, and also strong supply there, they're not buying as much. So that's really been a problem for the United States. The big probably issue for why oil came down yesterday and partially today is that U.S. demand has fallen off sharply. It fell by 1.36 million barrels from 19.47 to 18.1 last week. Part of that was related to the hurricanes in the southern part of the United States, the activity down. Also, the western states, all the fires, that people were not as active driving around because of the forest fires. So you've got a weakening demand, you've got the COVID issue, you've got more. 38 states in the States now have higher COVID cases. There's almost a record number of people in hospitals. Yesterday, I think the number was 77,000, a new record high in caseload in the United States. It just came out a few minutes ago on MSNBC. So we're looking at a difficult situation, and why I think we'll probably break 40 and probably even go to $36 over the next few weeks. And then it'll be, when does the vaccine come? If the vaccine doesn't come until Q2 or Q3, and energy demand weakens after the winter high season, then we'll probably see the price of crude oil maybe break 36. Right now, I think the target that I have for the next few weeks is down into that 36, 37 area, and then between the level of COVID activity and lockdowns and between what's going on with the vaccine, that'll tell us how much lower. But I think tax loss selling for the sector will be difficult this year, like it's been in many, many years in the past, where you have winning sectors like the IT sector, the Internet of Life that have done well, and yet you've had a lot of losses in energy, some mining areas and others, and that's where there's going to be probably aggressive tax loss selling in both Canada and the United States in both sectors.
We'll have more with Josef Schachter right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Josef Schachter. Joseph, what's happening with rig counts in both the U.S. and Canada?
Yeah, the Baker Hughes rig count just came out again it comes out on Fridays at 11 a.m. Alberta time, Mountain Time, and the rig count increased by 6 in the United States to 287 rigs, but that's down from 830 a year ago. So still showing you that even though there's a bit of a bounce, the industry is still in pretty difficult times because $40 oil doesn't do it. So the industry's activity level 65% below a year ago. In Canada, we're doing much better. We had a 3-rig increase to 83. That compares to 147 a year ago. But when you break it down between the oil and the gas, the rig count for oil is 42, up 2 on the week, but that's compared to 102 a year ago. So pretty harsh still there. The oil price really makes a difference in activity. But on natural gas, because we're looking at some very decent prices for AECO, you've got 41 rigs working right now. That's up 1 on the week, but that compares to 45 a year ago. So we're looking at some, the industry who are looking for liquids-rich natural gas. They're doing very well. AECO today was $3.15, which is a great price. Most companies have between $1.50 and $1.75 break even. So if it gets 2, they're moderately profitable. You get into the 3s, they start making a lot of money. And then there's low storage in Western Canada. So if we have cold weather, and of course, as I mentioned, there's snow in Alberta, and we're having a cold spell that's going to go pretty deep into the U.S. If you look at the national or the continental weather maps, U.S. NYMEX is $3.21, again a pretty robust price. And so I think we're going to see some very high prices during the winter. And as we've talked before in previous interviews, I was talking that my favorite stocks were the natural gas stocks, and those stocks have done extremely well. And those are the ones that I think will, could have a little bit of a pullback here, but those are ones you want to buy on weakness. For example, Tourmaline's low was 673 in March. It's trading today at 1857, so it's almost a triple. You look at things like Birchcliff. Birchcliff was down to 58 cents. It's just around $2, $1.98 today. So there's been some fabulous moves. Paramount was 81 cents. It's 263 today. So there's been some great moves for people who took advantage of the March low, which we did. We think now the sector is going to probably pull back. The oily names more so, especially if we break 40 and head to 36. But we think there's going to be a very attractive buying opportunity sometime in the mid-November to mid-December period, and we'll be sending out to our subscribers that window when we see it, and also recommending some new names for them to buy. And we're keeping an eye on that. And the quarterly reports for Q3 are starting to come out. Precision Drilling was the first one that was out yesterday, and a lot of the companies start reporting next week. And so we'll be going over those in our reports. We cover 27 companies in the energy and the energy service sector, and my favorite area is the natural gas sector, as mentioned earlier.
We'll have more with Josef Schachter right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, when we have low rig counts, does that mean a couple of years down the road we're going to have a shortage of supply?
Well, the rigs now with all these automatic all these automatic items that have been added to them, artificial intelligence apps that are handling repetitive tasks on rigs. Number one, they make it so that they're safer, speeds up the drilling. Most of the rigs today have walking capability, so they can go on an X or kind of a forward, backward, sideways kind of movement, so they can move to the next location where they can do pad drilling very efficiently. So I think you don't need as many rigs as you needed 5-10 years ago when we had boom periods, because the rigs are much more efficient and they're using pad drilling, which I think is more efficient. So the bigger players are probably like the 4 or 5 largest drillers in Canada probably do 80% of the business, but there's 24 companies that are part of the Oil and Gas Drilling Association. So some of those smaller players, if they're not well financed, or they haven't had the time and the money to upgrade their equipment to the latest and most up-to-date technology, they're going to be left behind. And we may see mergers, but the big guys have too much equipment as it is. And, with the efficiencies that are being done, wells that could have taken 3 weeks, 5 years ago, now can be done in 6-7 days. So you don't need as much equipment, if the activity level picks up to where it was 5 years ago.
Alberta's oil production, always derided by environmentalists as bad for the planet, but it sounds like it's pretty high tech and probably very low pollution now.
That's something that I was wished would have been brought up in these debates, is that the industry is working very hard to lower the emissions. They're doing everything from carbon capture. They're looking at, instead of using coal-fired electricity or burning diesel, they're going to use natural gas. There's so many things that are going on. Electricity is being used on rigs now, so that they can have an easier footprint and handle the methanes and the CO2s. And so they're not touting their own horn enough. Most companies, of course, have to report now ESG reports every year to their shareholders and to the government. So that is starting to come out. And most companies, if you go to their presentations when they do their quarterly report, they have a section usually talking about their ESG activity and what they've done. And I think that's also starting to help them in terms of getting more support. The natural gas stocks have done well because natural gas prices are higher. Plus, everybody sees it as the interim fuel until we go from using coal and oil to more renewables, and then maybe someday we're going to have antimatter. Maybe not in my lifetime that we're powered by antimatter or warp speed or the Star Trek world. But I think that we're going to be seeing a lot more use for natural gas as the cleanest burning fuel until we get to renewables that are competitive enough and that are available enough, and that, most importantly, that you can have storage from solar that can hold sufficient power. And that is, of course, just like the EVs. If I can't drive from Calgary to Edmonton, visit family, come back to Calgary without charging, I'm not buying an EV, which means, the technology has to go much, much further than the 300 kilometers that they can do right now, because each side of that trip is 300 kilometers.
Alberta's push to use natural gas to produce hydrogen, which when it burns only produces heat and water, is that a good move?
Yeah, the government wants to become more involved in that, so they're going to be doing a lot more support of the companies that are working on it and doing research. I think that's potentially a good opportunity for the country, for Alberta to have a new business that can be with a lot of jobs and of course be very positive for the environment. The problem is they also wanted to do things in plastics, and now with the single use stuff with the government, the plastics industry are being thrown to the dogs, and the government's plan to be an active player in that is now in question. So every time I think the Premier Kenney tries to find a way to grow the economy until oil prices recover, he seems to get shut down by Ottawa, and the frustration I think is picking up, and the Wexit view is becoming somewhat more visible in Western Canada, and I sure hope we don't go that way. But right now, I think the key thing is, our economy is hurting the most of any economy in Canada, and we do need energy. People are still driving in the 401 in Toronto. The Prime Minister is still flying around in his government jet, and so they can't say that do they want to buy that oil from Russia or from Saudi Arabia, or they want to buy it from Western Canada. So we need pipelines to the east, and we need to use what we can as efficiently and as cleanly as we can. And that's the argument of Kenny and the people in the industry, but it's falling on deaf ears so far.
Joseph, thank you so much for chatting with us.
My pleasure as always. It's take good care, Jim, and stay warm and stay safe.
My guest has been Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. He was speaking from my hometown of Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.